Hello and welcome to the February 22nd, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Ordinarily, we get into individual stocks. I'm going to show you something a little different for today's Chart of the Day. This is actually a two-part series, so there's going to be two different charts. Before we get into that, though, I want to remind everyone that we do have a free weekly Market Pulse newsletter. Within this newsletter, we have a market snapshot section which will give you a little bit of an update on what happened on the major indices in the various sectors. We then have a market rewind section discussing what transpired in the prior week. A market forward section looking at what we might expect in the week ahead given the current technical sentiment and historical state of the market. We give you a brief update on upcoming economic and earnings news that you can expect in the coming week. And then we also provide a market forecast based on our proprietary historical analysis of the market dating back to 1950. And then finally, probably the most significant part of the service, part that seems to be the area that folks really enjoy, is the Chart of the Day. And we normally feature a trade candidate, could be on the long side or on the short side, but we use this feature as an educational tool. So we'll give annotated charts showing possible entry areas, stop losses, and so forth based on the technicals. So be sure before you leave the site to make sure you sign up for the free weekly Market Pulse newsletter. There's no cost whatsoever involved. It's just a matter of providing an email address so that we can get everything to you. All right, taking a look at this chart now. It looks kind of interesting to me the way that transportation relates to the S&P 500 just before the S&P 500 tops. Now I'm going to give you some examples. This is back during the 2003 and 2004 recovery. Take a look here. Now this is a chart of the transportation index relative to the S&P 500 index. So as this line moves up, transportation's outperforming the S&P 500, and when it moves down, then transportation is underperforming. Now I find a couple of similarities in this chart, and also compared to what we've seen in 2009 and 2010. But let me explain a little bit. As you see the S&P 500 moving up here back in the May-June timeframe in 2003, notice that the relative strength in transportations went down. That then led to a flag pattern in the S&P 500 where the S&P couldn't get going until we got another relative breakout on the transports. Then we got to a point later in 2003 into 2004 where the S&P 500 once again made a move to the upside, but transportation on a relative basis underperformed, and this went on for quite a period of time, and as a result you can see the flag pattern that developed went on for many months before we then got another relative breakout in transportations to the upside, and then the S&P 500 followed suit. So to me it looks pretty interesting in that transports, and it makes sense because from an economic standpoint you would expect that if the market's going to do well, transportation stocks should be leading, because if the market's expanding, the economy's expanding, we need to ship more goods and so forth, you're going to see it reflected in the prices of transportation stocks. Now I want you to be sure to check or to view video 2 of 2 where we take a look at this same relationship, transportation stocks versus the S&P 500, and we do it in a 2009 to 2010 time frame. So be sure to check that out.